Hello and welcome to the City of Livermore's Affordable Home Ownership Program presentation. This presentation is an updated overview of the Affordable Home Ownership Program guidelines and requirements. Please be aware that several updates to the presentation have been made to reflect current household sizes and current income limits as well as housing prices. The city's affordable home ownership program makes homes available at a price affordable to low or moderate income households by providing housing units at a below market rate. The program is also known as a below market rate program or BMR program for short. The program considers household size, which includes all individuals who will reside in the affordable home. Households applying for the program must demonstrate that they have been residing together during the 6 months prior to the application submittal. Households must also demonstrate legal guardianship of all dependents, also known as minors. Household sizes will be matched to available units according to the minimum and maximum household size standards shown on this table. For example, a one-bedroom housing unit must have a minimum housing size of one person or a maximum of 3 persons. A two-bedroom housing unit must have a minimum of one person and a maximum of 5 persons, and so on and so forth. Potential applicants must be U.S. citizens or lawfully permitted for permanent residence. In addition, applicants must be first-time home buyers, which is defined as someone that has not owned a home or has had any ownership interest in any improved real property within the last 3 years. An applicant's gross household income will be assessed to ensure the household is eligible. As a reminder, gross income is the amount of money you earn before any taxes or other deductions are taken out of your earnings statement. Gross household income means all income of all adult household members 18 years or older. However, the assessment does not need to include income from dependents up to the age of 24 if they are full-time students. If a household member meets those 3 requirements, meaning they are a dependent, are 18 years or up to 24 years of age, and are full-time students, then their income does not have to be counted. Their income can be included if it is needed for a mortgage pre-qualification for purposes of the BMR application. However, if including their income will take a household over the income limit, it does not need to be included. Here are the recently adopted 2025 maximum income limits, which are based on area median income or AMI. So taking into consideration household size, these are the maximum income limits that allow you to determine what income bracket your household will fall into. For example, a household size of 1, if their household income is at or below $84,600, they would fall under the low income or 80% AMI bracket. However, if that same household has an income at or below $130,800, they would fall under the moderate income or 120% AMI bracket. If a 5-person household has a total household income at or below $130,500, they would fall under the low income or 80% AMI bracket. However, if the same 5-person household has an income at or below $201,800, they would fall under the moderate income or 120% AMI bracket, and so on and so forth. Here are the 2025 purchase prices. BMR units are priced between 80% AMI or 120% AMI. Each unit is already assigned at a specific AMI. All homes, whether they are new or used, use these purchase prices. For example, a one-person studio for a low income or 80% AMI household would cost $250,112, whereas a one-person studio for a moderate income or 120% AMI household would cost $420,033, and so on and so forth. Here is an example of costs associated with the purchase of a 3-bedroom condo. However, please note that this example does not reflect current sales prices. As you can see, the example breaks down the unit price, a 3% down payment based on the sales price, potential closing costs, and mortgage. We'll focus on the low income breakdown presented in the second column. Say your affordable sales price is $321,131 for a 3-bedroom condo with a 3% down payment, which would roughly be about $9,634. Now let's say that your closing costs, which can vary between 2% to 5%, in this example is 4%, which would total about $12,845. Then your estimated cash amount needed for this BMR would be about $22,479. Now, taking into consideration principal, interest, taxes, and insurance, also known as PITI, and HOA dues, your estimated monthly payment would be about $2,643. This is an example showing you what you may need to come to the table with and what your ongoing costs could be. As part of the program requirements, applicants cannot have more than 25% of the purchase price in total liquid assets. Liquid assets are basically anything other than retirement accounts, such as your checking and savings accounts, stocks, Bitcoin, etc. Additional assets may be contributed to the down payment for only very low income households for the purpose of qualifying for a first mortgage or meeting back-end debt to income affordability requirements. For example, if you are at or below the 50% AMI and your liquid assets exceed 25%, then the city will allow you to put down the amount of assets in excedence as a down payment. However, if you apply and are not a very low income household and your assets exceed the 25%, you are automatically disqualified. A pre-approval from a mortgage lender is required with the submission of a full BMR application. The city has a participating lender list for applicants to use. Although the city recommends that applicants use a lender from the list, applicants are not required to do so. However, please be advised that the city recommends applicants use a lender from the participating lender list as not all lenders lend on BMR properties. Should you choose to go with a lender not on the list, just be sure that they understand your intent to purchase a BMR unit through the city's program. Applicants must have a minimum FICO score of 660. However, if you have a credit score between 650 and 660, the city may consider your application, but this is dependent on your credit history and whether you can contribute a 3.5% down payment. This is a case-by-case situation that is based on these variables and would be subject to the city's approval upon review. In addition, applicants must also not have delinquent accounts, charge-offs with a balance, or collection accounts. Applicants must not have had a bankruptcy within the last 3 years, and a credit report would be required for all adult household members 18 years or older. Applicants must contribute a minimum down payment of 3% of the purchase price, which must be from your own funds and must be confirmed through financial account statements, meaning you will be required to submit banking statements confirming that the 3% down payment has been in your account for the past 3 months prior to the submission of your application. Funds from retirement accounts and income tax refunds can be considered as seasoned funds for as much as 1.5 of the required deposit. For applicants having to show proof of funds to cover closing costs, which can be anywhere from 3 to 5% of the purchase price, applicants can use gifted and/or remaining retirement account and income tax refunds as proof. For example, if a person can show they filed a tax refund and are expecting a refund amount, they can commit 1.5 of the expected refund to the down payment and the remaining 1.5 to help cover closing costs. Applicants are allowed to use gifted funds. Up to 17% of the purchase price is allowed as gifted funds, but will be counted towards liquid assets. Gifted funds can be used towards closing costs and/or as an additional down payment. If an applicant intends to use gifted funds, a gift letter would be required along with the application submission. Gift letter templates can be found online and will usually include the information of the person gifting you the funds, who they are in relation to you, and the amount of the gifted funds, etc. As previously stated, applicants must still contribute 3% of their own funds to the down payment. Your debt to income ratio refers to the total housing payments, including PITI or your interest, principal, taxes and insurance, and HOAs, plus the sum of all minimum payments on debts such as car loans, credit cards, etc. The debt to income ratio must not exceed 40% of the total household gross monthly income. An exception may be made if you exceed 40%, but not more than 45%, which would be dependent on the down payment and your credit score. For example, if your monthly debt owed is $2,500 and your gross monthly income is $5,000, then your back-end debt to income ratio is 50% and you do not qualify. Applicants will enter into a 55-year term resale restriction agreement with the city. The buyer would be required to live in the home and annually certify that they are occupying the home. Buyers cannot lease nor rent any portion of the home out. Applicants will be required to maintain the property and agree to a no criminal activity policy. And although refinancing is an option for buyers, the program does not allow cash out until the resale of the property. In addition, the program will require a subordination agreement, which is a legal contract establishing the order in which debts are paid off in the event of a borrower's default or bankruptcy filing. If and when deciding to sell a BMR, an owner has the following options. 1. They could sell the housing unit back to the Affordable Home Ownership Program at the affordable sales price established at that time. Or they have the option of selling the unit at fair market value, which would require a seller to pay the silent city loan at a 3% compounded interest. Part of the signing documents would require an applicant to sign a promissory note secured by a deed of trust in favor of the city for an amount equal to the difference between the fair market appraised value and the affordable sales price. For example, if an affordable housing unit has an affordable sales price of $300,000 but is appraised at a fair market value of $650,000, then the silent city loan would be the difference, $350,000 in the scenario. No payments are required for a silent city loan if the applicant is in compliance with the resale restriction agreement, unless the home is sold at the fair market value. If you have a silent city loan compounded annually at 3% for up to 20 years, the silent city loan would sit at the total amount after the 20-year period has concluded and would remain at that amount for the remaining 35 years, which would be the remaining years of the 55-year term resale restriction agreement. Using the same example in the previous slide, if you have a $350,000 silent city loan with a 3% compounded interest over 10 years, the silent city loan plus the compounded interest over 10 years would total approximately $470,371. So say you own the BMR in this example and have owned it for 10 years and you want to sell it. You can either sell the unit for whatever the sales price is in the BMR program that year, as it changes based on AMI, and the silent city loan would be forgiven. Or you can sell the BMR at market rate for whatever amount you want, but you will have to pay the $470,371 back. First-time homebuyer education. The Eden Council for Hope and Opportunity, also known as ECHO Housing, provides homebuyer education workshops as well as fair housing, tenant landlord, and pre-purchasing counseling. Founded in 1964, ECHO Housing is a full-service housing counseling organization providing services to residents in Alameda and Contra Costa County. The city contracts with ECHO Housing, which is a U.S. Department of Housing and Urban Development, also known as HUD, approved curriculum. As potential applicants, you are not required to use ECHO Housing, but any first-time homebuyer education course you do decide to complete must be HUD approved. In addition, there are free homebuyer services, including pre-purchase counseling services that assess your readiness for a home purchase, identifies financial opportunities and assistance programs, as well as assisting you with budgeting and credit repair. An 8-hour homebuyer education course that satisfies HUD's first-time homebuyer education requirements for federal, state, and local housing assistance programs. You can use any agency that you wish. However, please be sure that they are HUD approved in order to meet the Affordable Home Ownership Program requirements. First-time homebuyer certificates will be required for each household member aged 18 years or older. Although you are not required to have the certificates of completion at the time of the application, it will be required prior to closing. Preference points. Applicants can qualify for up to 10 preference points based on preference categories. Preference points are used to establish priority groups. All applicants will be grouped based on the total number of preference points the household earns through any combination of preference categories. Priority will be given to those groups with the highest preference point total from highest to lowest. For instance, a household with 3 preference points will not be ranked higher on the waitlist than a household with 4 preference points. Preference points categories include working in Livermore, which provides 2 points, living in Livermore provides 2 points, being a credentialed teacher from the Livermore Valley Joint Unified School District provides 2 points. City of Livermore emergency responders receive 2 points. Being a veteran receives 1 point, and being a tenant of a rent-restricted unit receives 1 point. Please refer to the preference category requirements listed in the Affordable Home Ownership Program guidelines for additional information. To qualify under these categories, a household must meet the following. To qualify for working in the city, a household member must be working full-time, at least 32 hours per week, as a permanent employee at a business within the corporate city limits. Contract or temporary employees are not eligible. If an applicant is retired and income is based on retirement disability income from previous employment within the city limits, then they qualify. To qualify for living in the city, an applicant must have a primary residence within the corporate city limits and have resided at the residence for a minimum of 6 months prior to application submittal. To qualify as a credentialed teacher, a household member must be employed as a full-time teacher with the Livermore Valley Joint Unified School District for a minimum of 6 months prior to the application submittal. To qualify as a first responder, a household member must be a full-time employee of the City of Livermore as a police officer, sergeant, lieutenant, or community service specialist, or a firefighter or a firefighter paramedic with the Livermore Pleasanton Fire Department. To qualify as a veteran, a household member must be a veteran of the U.S. military. To qualify as a rent-restricted unit resident, a household member must reside in a recognized subsidized rental housing unit and be in good standing with the property management company. Again, please refer to the preference category requirements listed in the Affordable Home Ownership Program guidelines for additional information. Shannon Andrews is a consultant for the City of Livermore and is a program administrator for the Affordable Home Ownership Program. The program administrator manages the application process for this housing program. For questions about eligibility and requirements, please email Ms. Andrews at shannon.andrews@mbakerintl.com. The pre-application period is expected to open in January of 2025. Please sign up for the city's housing interest list to be notified. Here is an overview of the application process. The city will open the online pre-application. Once the pre-application closes, the city will sort applications by the number of preference points awarded and will place applicants into priority groups. Applicants will then be randomly sorted or drawn through a lottery-style selection process within each priority group. Each applicant will be given a number or rank. Applicants will be notified in writing of the results of the selection process within 1 week of the selection process taking place. In rank order, applicants may be invited to submit a full application. There is a one-time application fee of $125 payable to the City of Livermore, which must be submitted along with the application in order for the application to be considered. The city and program administrator would then screen each application and notify eligible applicants of their eligibility and forward them to an approved lender if need be. Lenders will then review all documentation. Down payment assistance programs. In addition to the Affordable Home Ownership Program, aka BMR program, Livermore offers a down payment assistance program which can be used to assist with the down payment and or help with closing costs. The City of Livermore offers households at 80% AMI, which include Begin and Cal Home, and the Livermore MAP or Mortgage Assistance Program for households at 120% AMI. All three down payment assistance programs accrue a 3% simple interest. Begin and Cal Home include the option to defer payments for 30 years. At the end of the 30 years, should applicants wish to sell, applicants will need to pay off the principal plus the accrued interest. The Livermore MAP loan does require monthly payments over a 20-year term period. Most people do use these loans when buying a BMR in order to put down an additional down payment or to assist with non-recurring closing costs, which are closing costs that you pay once and are non-recurring, such as escrow fees and notary services, etc. You can apply for down payment assistance programs at any time, and the city encourages you to do so. Here is a general overview of the program qualifications that were covered. Applicants must be first-time home buyers, must occupy the home and certify occupancy annually, must not exceed income limits of 80 to 120% AMI, must have a minimum FICO score of 660, must provide a 3% down payment, cannot have a debt-to-income ratio of more than 40%, and must complete a HUD-approved homebuyer's education course. How to apply. Applications and program guidelines are available on the city's website, which can be accessed using the QR code provided here. The city also recommends that interested applicants register for the city's interest list in order to be notified of upcoming events or workshops. This will be discussed further in the next slide. Stay informed and join the city's interest list. The city highly recommends that you use the QR code here to apply and join to the city's interest list in order to be notified of any housing opportunities, including application openings and deadlines. Now we will cover some other financial opportunities provided through CMG Financial, a well-capitalized mortgage bank founded in 1993. CMG Financial has been widely known through the mortgage, banking, and housing markets for responsible lending practices, industry and consumer advocacy, product innovation, and operational efficiency. Other financial opportunities include the Fannie Mae Home Ready program, which is a mortgage initiative designed to help low to moderate income borrowers purchase or refinance a home. With this program, applicants must not exceed an 80% AMI. The program offers reduced interest rates and pricing, allows non-occupant co-borrowers, allows for as little as a 3% down payment, offers low private mortgage insurance, and offers a maximum combined loan to value or CLTV of 105% with an eligible community second loan, which is offered by housing agencies or other government entities to help with down payment or closing costs. The Freddie Mac Home Possible program is designed to help low to moderate income borrowers achieve home ownership by providing affordable mortgage options. Borrowers' incomes cannot exceed 80% AMI under the program. The program offers reduced interest rate and pricing. The property must be the borrower's primary residence, must have a minimum FICO score of 660, provides reduced private mortgage insurance, and a down payment as little as 3% and allows for flexibility on how the down payment is sourced, including using gifts, grants, or personal savings, etc. The California Housing Finance Agency, or Cal HFA, offers the Cal Plus and Cal HFA ZIP programs. Cal Plus is a first mortgage with a slightly higher interest rate, which can be a conventional or a FHA loan, and is combined with the Cal HFA Zero Interest Program, or ZIP. The Cal HFA ZIP program offers 2% to 3% to go towards a down payment or closing costs at a 0% interest rate. Cal HFA also offers the My Home Assistance Program. The My Home Assistance Program allows income limits up to $300,000. Applicants must be first-time home buyers and the property must be the borrower's primary residence. Applicants must complete home buyer education counseling and the property in question must be a single-family, one-unit residence, including approved condos as well as manufactured homes. CMG Financial also offers the Home Funded Down Payment Gifting Program, which allows for personal gifts from donors using CMG's Home Funded crowdfunding application as a source for all or part of the down payment or closing costs. The Home Funded Down Payment Gifting tool connects directly with your social media accounts like Facebook and X to allow users to share their campaign to help increase their down payment savings. In addition, it offers the exclusive costs covered program for first-time homebuyers who complete the homebuyer education or pre-purchasing counseling. CMG Financial will give $2 for every dollar raised via online gifting. Does not include funds that are pledged already, but up to the lesser of 1% of the purchase price or up to $2,000 in grant if the home buyer education or pre-purchase counseling is completed prior to the purchase contract being signed. In addition, applicants must meet the program income restrictions to qualify. Thank you for your participation in this presentation. We hope you found the information helpful. If you have questions, please feel free to visit the city's Affordable Home Ownership Program website. In addition, please register to the city's interest list to stay informed about pre-application opening deadlines, closing deadlines, as well as future workshops. Thank you and have a great day.